Don't guess your way through the most complex tax changes in a decade. A lot of these changes kick in mid-year or they apply retroactively. It's really important for you to know when they kick in and why, because we could be amending your returns. You could be getting big fat checks in the mail, refund checks. If you don't plan now, you'll either miss the write-off or walk into a trap, and we don't want that to happen for you.
Welcome to Life Changing Money, a podcast all about one of the most taboo topics in the world, money. I'm your host, Barbara Strehans, and we're going behind the scenes on business owners' journeys to money, success, and wealth. Let's get started.
Hello, and welcome to another episode of Life Changing Money. I'm your host, Barbara Strehans, and I'm the founder of Your Tax Coach and the Council Mastermind. And this is going to be episode 2, all about the new One Big Beautiful Tax Bill. These are things you as a business owner or real estate investor need to know. So if you haven't listened to part 1, go back and hear all the foundational updates that are in the One Big Beautiful Tax Bill. And this episode is all about what's under the hood, the advanced strategies and lesser known changes in the tax bill. And as a reminder, if you're listening to this podcast, coming soon is our Write Off Your Life Masterclass. So you need to register now for the Write Off Your Life Masterclass on September 17th, 10 a.m. Pacific, 1 p.m. Eastern. It's your crash course in how to keep more of your money legally and confidently. So not only am I going to show you dozens of deductions that you're missing out on, but I'm going to show you what you need to document in case you were ever audited and to stay compliant. I'll also be going over a lot of these One Big Beautiful Tax Bills as well. And so let's dig in. My favorite, absolute favorite change in this new tax bill is bonus depreciation. And if you hear depreciation and you don't know what that means, as a business owner, it is your civic duty to yourself, to your family, to your finances. You need to know what depreciation is. I'll break it down. So depreciation, it's a phantom expense, meaning it's not actually costing you any money, but the government is giving you an incentive to buy things for your business, and in turn, they give you a depreciation deduction. So when do you expense versus depreciate? So anything over $2,500 for most business owners, anything over $2,500, you have to depreciate over its useful life. Okay, well, what's the useful life of my $3,000 Mac computer? The IRS says it's 5 years. What's the useful life of this couch that's in my podcast studio? The IRS says the useful life is 7 years. What's the useful life of this new rental property that I got? Well, the IRS says if it's a residential property, it's 27 and a half years. And if it's commercial, it's 39 years. So every single item over $2,500 has a useful life according to the IRS. And that's what us as tax accountants have to take when we're doing your tax return. All you have to know as a business owner is anything over $2,500 is not an expense on your business. This is a really big deal for you to know because as a business owner, you're just swiping your credit card left and right, being like, oh, it's a write-off, it's a write-off, it's a write-off. Well, it might not be a write-off if it's over $2,500. I'm staring into this camera right now that was like $8,000. So no, it was not an expense in the business because it was over $2,500. But here's the kicker. The last few years, if you've started a business in the last few years, you're just used to bonus depreciation being there. And so it all kind of has been a write-off to you. It all kind of has been an expense because you've been able to take it because of these bonus depreciation rules. So in 2022, bonus depreciation was 100%, meaning anything less than a 15-year useful life, you could take 100% bonus depreciation. So this $8,000 camera, it still was not an expense on my business. I had to depreciate it, but my depreciation schedule said $8,000 as a depreciation expense because in 2022, it was 100%. Then in 2023, it went down to 80%. So you bought a $100,000 vehicle, you could write off $80,000 of it, not $100,000. Then in 2024, it was 60% bonus depreciation. So you buy a $3,000 computer, you cannot expense $3,000. You can only expense $1,800. That's a big deal. Like, you spent $3,000, you can only deduct $1,800 deduction at your tax rate. Maybe you save $700. So this thing that cost you $3,000 for your business only saved you $700. And this year, 2025, it went down to 40%. That could put business owners out of business. And the government luckily saw that. And so they said, all right. We'll bring back 100% bonus depreciation, but only as of inauguration date. So January 19th, 2025, you had to have purchased these items January 19th, 2025 or later. And so let's just say all of 2025, you can deduct 100% bonus depreciation. So you buy a new car this year, 100% bonus, as long as it's used 100% for business, it's over 6,000 pounds. You buy a new computer, a camera, anything over $2,500, it's going to be 100%. Now, this is huge for real estate investors because you buy a property, let's say, I'll use the example, we're in escrow on a quadplex right now. A quadplex is 27 and a half year property. And let's say it's $500,000 for this quadplex. I normally would only get like $18,000 a year in depreciation because if you took $500K divided by 27 and a half, I get $18,000 of depreciation. But oh, nay. I have a tax strategist. She's fucking amazing. Her name's Barbara at Your Tax Coach. Oh, wait, that's me. And we do a cost segregation study on this property. And the cost seg says, well, the whole thing is not 27 and a half year property. We have carpeting and we have drywall and we have paint and we have screws and we have nails and we have light fixtures and we have fans on the ceiling and we have curtains on the windows or shades on the windows, curtains on the walls. We have appliances. We have windows. We have roofs. We have so many different things that are not 27 and a half years. And so we segregate the property, hence the term cost segregation study. We segregate the property and we say, actually, this year we get $150,000 deduction, not $18,000. So cost segregation studies are a huge deal, huge deal. You can only do these studies with an engineering firm or a CPA firm. We do them here at Your Tax Coach, so definitely reach out if you have an investment property. So this can be a short-term rental, a long-term rental, a commercial property. It could be a warehouse. It can be a storage facility. It could be an RV park. There's so many different ways that we can do a cost seg study. Now, with bonus depreciation, we also have to take Section 179, and the Section 179 limit was raised to $3 million. So sorry for those of you buying planes out there. It's still limited to $3 million, although you could then take bonus for the rest. But this is great for HVACs, roofs, machinery, software, tenant improvements. It gives you big upfront write-offs, and you don't have to take depreciation so slow, which is awesome. R&D expensing is back. For those of you business owners that are doing any sort of research, any sort of development, any sort of process improvement, any sort of technology, you've been able to take research and development credits. But in the last few years, you had to amortize these expenses, but now you can expense them, which is great. And you can make these retroactive back to 2022. So if you're a business owner out there, let me just tell you, industries that this applies to that a lot of people think it doesn't. If you're a roofer, you probably qualify. Or any type of construction, please reach out to us to see if you can qualify for R&D. If you're a dentist, I've never seen a dentist that does not qualify for research and development because every dentist has a different procedure and process and innovation and way that they fill a cavity or they put on a crown or a root canal or an implant or a way they do veneers. Same with roofers. Every roofer has a different way that they put on a shingle or a different adhesive. Chiropractors all have their own way of adjusting. And so if you do something a certain way, different than everyone else, you're improving a process, you're researching something new, you're building a technology. No, white labeling technology doesn't work. But let us know because there's so many business owners out there that are not taking R&D that could and should. And we can go back, amend your prior year returns and get you back these tax credits. And remember, tax credits are way better than deductions. So definitely take them. Fringe benefits got a glow up. You business owners out there, did you know that you could pay your employees student loans or tuition up to $5,250 a year? Yeah, it's tax-free to them, the person you're paying the loan off, and it's a business deduction for you. And that was set to expire this year, and they were made permanent. It is now permanently tax-free to pay someone's student loan or tuition $5,250 a year. Wellness reimbursements, you guys all know I talked about this a lot with our tax-free family course, but wellness reimbursements, as long as you have a health reimbursement account set up in your business, which all of you should, if you don't have it yet, you need the tax-free family course. Wait to grab it until you grab the Right Off Your Life course, because when you buy the Right Off Your Life course, you get tax-free family for 50% off. So sign up for the Right Off Your Life masterclass, September 17th, 10 a.m. PST. Just comment life anywhere on any of my social medias or click the link below. But I probably wasn't supposed to say that, but you do get my courses 50% off when you buy Right Off Your Life. So definitely grab it then. Maybe I shouldn't tell you and then I would make more money, but that's okay. I gave you the tea. So when you have this HRA set up, especially for those of you that are our strategy clients, now you can write off therapy, fitness, your gym memberships, your personal trainers, holistic care. It's amazing. There's now a deduction for car loan interest, which I think is interesting. I don't know that I like this one. I think it incentivizes people to make bad financial decisions like, oh, I'm going to buy a more expensive car that I can't afford just because I can deduct $10,000 of interest. And for those of you business owners, probably doesn't matter to you because we are already writing off all the car interest on your business return, as long as it's 100% used for business. But if you do have a personal car and you have a loan on it, you can take up to $10,000 in interest on this personal use car. But there are income limits. So the max you can make is $200K as a married person, $100K if you're single. 529 plans can now be used for classroom expenses for K through 12, which is cool. So now we're homeschooling our youngest, which is awesome. I'll let you know how it goes. Maybe it'll be a train wreck. And by the time you listen to this, he'll be back in regular school. But hey, he wanted to be homeschooled. He wants to travel more. He's taking like financial, his new curriculum. They're teaching financial management, entrepreneurship, public speaking, taxes. It's so cool. And we can pay for these things through a 529, which is awesome. For those of you gamblers out there, the gambling rules just got real shitty for you. So just reach out if you want me to explain it. Trump accounts are awesome. There's not a lot of information about them yet, but these are really great savings vehicles for your kids that are under 18, where depending on when they were born, the government might give you $1,000 to start this account, and then you're allowed to put in $5,000 a year. And this $5,000 could be gifted by parents, grandparents, loved ones, nonprofits. We're still waiting on IRS guidance on like where we're setting these accounts up and how, and who's investing it, and like how do we distribute it? Is there an age when they need to like close this account? How is it taxed? So there's still a lot of questions, but just know once all the answers are out there, you will get a newsletter about it from us if you're on our newsletter list. Just comment newsletter anywhere on our social medias. You can be added to it. We have like 13,000 people on our newsletter list now, which is really freaking cool. So a lot of these changes kick in mid-year or they apply retroactively. It's really important for you to know when they kick in and why, because we could be amending your returns. You could be getting big fat checks in the mail, refund checks. If you don't plan now, you'll either miss the write-off or walk into a trap, and we don't want that to happen for you. So register now for the Right Off Your Life Masterclass, where I can answer all of your tax questions, September 17th, 10 a.m. And what's really cool about the Right Off Your Life Masterclass, it relaunches our Right Off Your Life course. And in the course, I've re-recorded every single video. That was a labor of love just for you all. So new videos, whole new presentations, all new modules, and there is now Barb AI. so you can have Barb in your back pocket and ask her a tax question. You are welcome. Yes, that counts as my R&D for this year. So don't guess your way through the most complex tax changes in a decade. Come learn the moves, and that will save you thousands of dollars and finally give you peace of mind. I don't know why everyone still has anxiety about their taxes. It's like, just come to my masterclass, be a client of ours, ask questions, be involved. We are here for you. Literally, we love answering your questions. So please be there. Register below or just comment life anywhere on our social medias. And I can't wait to see you.
Thank you for listening to this episode of Life Changing Money. Don't forget to subscribe, and I would love if you left a review and shared it with your friends. See you next time.